All of us want to make money and become rich. Filthy rich. Think Crazy Rich Asians rich or Wolf of Wall Street rich. Don't lie to me and say you don't. Just don't. Shh. Now, most of us face a dilemma throughout our journey. Because you see, not all of us have money to begin with. Some of us have to work. But not all of us like doing a lot of work. I know I don't. So most of us look for the secret to getting rich while exerting minimum effort. But you know what? You don't have to look very far because the answer is just around you. Right now, it's a few taps away on your phone. It's in your local neighborhood. It's even on the table beside you. If people all over the world collectively decide that your pen has $1 million value, that is. That's the best thing about investments. It's accessible to all. You don't need a lot of money to start, and you don't have to walk through fire to see green. You just have to know how to pick the right ones to value. And Investops is here to help you with that. Hi, this is Sam, and I'm here to tell you 6 great investments you should make in 2022. But before that, go ahead and click that like button. It helps the channel bring more people to our little bubble. While you're at it, click the bell icon to subscribe to this channel and stay on the loop with the latest videos on personal finance and investments. There are a lot of types of investments to choose from nowadays. We can't guarantee that we can pinpoint the one that will turn you into a millionaire overnight. What we can tell you is some of the greatest investments you can make that will give you the best odds at optimizing your money. These investments have stood the test of time and are sure to work even if all you do is just stake in by the end of this video and forget about it for a year. Check in a year after and you will see returns one way or the other. I did not just conjure that out of thin air. All of these have been proven to be solid even when trading at all-time highs and crazy surges. Number 1. Index funds. The way index funds work is really simple. Basically, it's just one big bag of stocks that you can immediately buy cheap, allowing you to own a small portion of everything in the market. By doing so, you get to diversify your portfolio. A diversified portfolio means lesser risk. So this is good for you if you're looking for a long-term investment that will not keep you up at night. Number 2. Individual stocks. Now, you might be thinking, well, you said index funds good, individual stocks bad. I know I've told you about the advantages of index funds over individual stocks, but that doesn't mean there is nothing good about it. Even though a lot of us feel much safer just buying index funds, humans are just naturally curious. Isn't that why we have the saying, curiosity killed the cat, but satisfaction brought it back? Let's be real. Once we start seeing money come in, we get hungry for more. Then, we test if we can do more than just waiting to hit the jackpot. So, if you think that's you, then you might want to consider banking on individual stocks. If you choose the right ones, of course, you will end up making a considerable amount of money. Higher risks, higher returns. That is what you'll hear from a lot of seasoned investors. With the wrong choice and strategy, you will end up losing a lot of money. You can make a lot of money really fast, but you can also lose money really fast. So, to lessen huge losses and ensure high profitability, here are some things you should keep in mind. Number 1. Research, 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 research. Make sure that you are investing in the right companies. Understand how they operate, learn their history, and check their products or services. But I don't like reading. Well, you must. This is not optional. This will prepare you for Number 2. Don't buy the hype. Buy the rumor. Sell the news. Sure, this is good to follow. Not if you didn't check your facts first. A lot of people do not do their own research and just put blind faith on the chatter in their echo chambers. Save yourself the stress of investing in a fully priced end stock that will probably nosedive for the next few months. Cross-check the rumor. Check if you're still in a good position. Then, decide whether to buy or not. Last but not the least, number 3. Never go all in. Only invest what you can afford to lose, and make sure to not invest it all in one company. It is always best to diversify your portfolio to lower risks and maximize profit taking. Think of investments like you would your physical money. It is best not to keep them in one place, so in case someone sticks you up or robs your house, you wouldn't have to worry about how to stay alive until the next paycheck. Number 3. Cryptocurrencies. I hope you saw this coming. It would be impossible to talk about great investments and not mention one of the most bankable, though controversial, investments of the past decade. You've probably heard all the buzz around crypto by now. Teenagers turned multimillionaires after years of long-term Bitcoin investments. 20-somethings quitting their 9-to-5 jobs because of a well-timed stake in BNB. Families who are on the brink of homelessness hitting the jackpot with Shiba and Doge. All of that. What's good about crypto is that you don't really have to start big in order to make it big. Investing in cryptocurrencies requires a lot of research, since their values depend on their market cap, convenience, projects, and functionality. It can also get quite overwhelming at first because there are thousands of them out there. If you don't have any idea where to start, it would probably be wiser to just keep to the top 10 cryptocurrencies. They are some of the most secure and most established out there. Even better, you can start off with the top 2 cryptocurrencies, Bitcoin and Ethereum. After all, most returns over the past decade were from them. Number 4. Alternative investments. This type of investment is one of the most dynamic as it covers a wide range of assets. This includes, but is not limited to, sentimental collectible items such as rare Pokemon cards, classic cars, baseball cards, rare coins, jewelry, and, over the past few years, it has shown to be doing quite well as it is steadily appreciating every year, suggesting that this is something to watch out for in the next few years. Although highly rewarding, it can be difficult to turn these into cash immediately as they are fairly illiquid. But hey, it's fun to collect items while making money off of it, so why not? You, being a hoarder, just might pay off in the future. Number 5. Real estate. Sure, the recent towering prices and interest rates on real estate are really intimidating. But don't let that push you away from one of the best investments you could ever make. There are a lot of reasons why investing in real estate is a favorite among millionaires then and why it is still a favorite until now. First, everybody needs a space to live and operate in. If you are not a homeowner, you're probably renting out apartments or rooms. If you don't have your own commercial space for a business, you're probably a tenant paying monthly leases. In the long run, you will be spending more money if you continue renting than you would if you just purchase your own property. Why not buy your own instead? Why be the lessee when you can be the lessor? Second, the value of real estate is always less volatile than the stocks in the market. High-valued buildings and properties are less likely to become worthless. Land is also very limited, and the more land is acquired, the higher the prices will go. Third, you have full control of the property, which means you can do basically anything to it. You want to move in? Of course. You want to rent it out? Go ahead. You want to put up a business in it? No one's stopping you. You want to do all three? Perfect. The only possible downside to investing in real estate is the capital. It sure would be hard if you don't have the money to begin with. But that is what researching is for. Look into properties or lands that are within your budget. Watch out for news on huge developmental projects nearby and make connections with people in the real estate world. Gradually increase the value of your properties by slowly renovating them. Believe me, you will thank yourself in the future. Before we reveal number 6, click the like button if you are enjoying this video so far. Done? Okay, let's move on to the next. Number 6. Roth IRA. We've now tackled most of the money-making investments, and you might even be counting your chickens right now. Don't do that just yet. Let's talk taxes. What most people fail to realize is that making a lot of money means paying higher taxes. One way of avoiding that is investing in a Roth IRA. What it is simply a retirement account in which you can put in up to $6,000 annually if you are below the age of 50, or up to $7,000 annually if you are aged 50 and above. These annual contributions are taxed based on your income bracket. The after-tax money will go to your Roth IRA savings, and the total amount of money gathered by your retirement will then be completely tax-free. Let's calculate. Say, for example, this is you. You are 20 years old now. Your average salary per year is $56,000 before taxes. Your annual contribution is $6,000. The average annual return you expect from your IRA investments per year is 7%. By the time you retire at the age of 60, you'll have $1,281,657 tax-free. You will have then saved $855,865 in taxes when you retire. You would not have the same yield if you invested in a different type of retirement account. Most brokerage firms, banks, and investment companies offer a Roth IRA. You just have to find one that suits your goals in life. I know the title only says 6, but here is number 7. If you haven't already, click the bell icon to see brand new videos on personal finance and investments from this channel regularly. Now, that's a personal investment you're sure to benefit from. Plus, it's free. Thanks for watching. And until the next video,